and we'll discuss the NASDAQ and particular firms. Before I head to UF, let me pull up this final chart. The market has had a great year. As of Thursday morning, the S&P and NASDAQ are both up 11% so far this year. However, clearly I suppose we should term it a correction when, indeed, 20% is the area that needs repair. What do you think of the sell-off and the broader U.S. market, Chaff? We're likely to experience a few really challenging revisions of historical data, because I believe we're in a mild recession. When it comes to non-farm payrolls, it's more important to consider how frequently the statistic is updated than the actual quantity. In actuality, these things are continually revised, and at the moment, we are overestimating and revising less. That also applied to GDP, Sachs said. I believe that we are in a difficult position. Then, in very straightforward English, people who manage highly cyclical industries tell us that there is no demand. This last week was an intriguing one, Jason. You brought up millennials, but there was a huge warning on demand for ERM, which makes you assume that all these young people are YOLOing whatever money they had. As a result, you're beginning to witness the effects of the surplus capital, whether it's the hot check or something else entirely, in these cyclical enterprises. I believe that we are in a recession and that there is no demand. Powell will have to make a cut as it likely gets more apparent in Q3 and Q4. Will they overreact to the pressure? That is the question. This year, what's more popular than Nvidia stock? In the near future, the uncommon, limited edition Nvidia keychain souvenir might be valued hundreds or perhaps thousands of dollars. In a matter of seconds, our original stock was gone. Cut 75 to 100 instead of 25 and go slowly. You can get yours right now by clicking the link below. All right, Freebird, 2 consecutive quarters with negative GDP are the technical definition of a recession. We're bouncing along, but we haven't had that. Is the recession inevitable, or do you think we'll see a beautiful recovery if they lower rates as much as the prediction markets are indicating? What are your thoughts on the U.S. economy as a whole? Of course, government spending and inflation must be taken into consideration. How much of today's economic growth is being driven by government spending? The U.S. federal government is expected to spend almost 30% of GDP, or $7.3 trillion, out of a $25 trillion GDP in the upcoming year, and it's clear that we're still dealing with inflation. The true question is how much of the economy is expanding due to productivity gains in industries where people are producing goods and performing tasks, as opposed to the government using its borrowing and taxing power to spur growth by inflating figures, forcing money onto companies, putting capital into the markets, and generating leveraged trades in the markets. That's why I'm still worried about it. As I stated last week, I continue to have serious concerns about a number of the economy's severely troubled sectors, including the manufacturing, industrial, and agricultural sectors. However, you can continue to develop and look good in the software and services sectors, where you can raise pricing and have a wonderful high-margin business. However, there are numerous aspects of the U.S. and worldwide economies that are currently facing difficulties. Let's discuss this soft-to-bumpy landing, SAC. Low-end consumers are undoubtedly becoming weaker. Examples of people searching for deals who wish to save money using those services are those who use Aram and Amazon. The consumer is robust, according to higher-end services with higher price tags, such as Uber and some upscale merchants, which are actually growing. This earnings season was a tale of two cities, with many high-end people claiming that high-end consumers are robust while low-end consumers are weak. How likely is it that we will see a recession? And to answer your second point, Elon appeared on Lex Fridman for around 8 days or so lately. The length of his appearance was unprecedented for the podcast. However, he also discussed his conversations with Trump and VC, who has been vocal about this on our show and elsewhere. He was a major candidate for vice president and advocated for drastically reducing government spending and increasing efficiency. However, there would be a response. So, does the prospective Republican administration have a plan to drastically reduce spending? And as a presidential candidate in either party, do you believe that could have been too unpopular to announce as a strat? In historical measures, 4.3% is still a relatively low percentage, but it represents a significant increase to leap thus far in a single month. Naturally, it is also higher than the 3.5% it was a year ago. Therefore, the increases we're witnessing, 10% year over year, 5% month over month, are really noteworthy. Consumer weakness is clearly evident, and I believe that professional investors are becoming increasingly concerned about the possibility of a recession. Last but not least, it's very obvious that the private sector is experiencing a recession if the effects of government expenditure are taken out of the picture. I mean, as we have been discussing, the government has been spending excessively, resulting in a 6% GDP deficit. The most recent Q2 growth figure was approximately 2%. Therefore, we would undoubtedly be in a recession. Our growth rate would be negative if you made the government live within its means and cut its way back to balance. Therefore, I do believe that the economy is suddenly looking really precarious. I'm not sure if we will truly enter a recession in the next months. Okay, listen, I want to ask the question to everyone in this room. You cannot dodge the difficult questions on the Allen podcast. You must respond to them. Which is more likely, Chamath, sitting here a year from now? A market rise or a recession, which is defined as 2 quarters of negative GDP? A recession or a market upswing? Indicate which is more likely, either as a percentage or simply. You're next, Freebird. Those are not mutually exclusive. You're suggesting that in a year? To be honest, I have no idea. The length and meaning of the original content are preserved in this version. Only grammatical and clarity corrections have been made a safe haven or a high growth potential. Get your Nvidia keychain quickly for less than $10. Only the first 100 orders will qualify for our huge discount. Currently, Alphabet, Meta, and Microsoft are all relatively inexpensive, but their valuations will increase. Therefore, I haven't done anything in the past several days. As I indicated on the air, I did purchase a small amount of Facebook, or Meta, during the major collapse. However, it hasn't mattered because the market is trading as a single entity, just like during previous volatile times. They failed to discern between exceptional management, entrenched growth, and fortress balance sheets. They are eliminating them all. Therefore, I am unsure of the catalyst. As we said, I believe that the economic data that will be released this week will be the catalysts for the future, because if the data is poor or indicates a struggling economy, it will bring them all to the ground. And that's when you come in. I have nothing to do on such days, which is the reason I dislike the market return at current levels. I don't buy the momentum, and I don't sell my core names. To fill my positions, which are rather filled, and to find others, I need a true washout of the market. Jimmy the Semis. Look, after the sell-off, Keith Lerner at Truist has upgraded the tech to overweight now. This is one of the places that comes to mind while discussing what individuals find more appealing. And we're going to, let's just take Nvidia. If you look at the performance of semi-name brands this week, Taiwan Semi is up 10.5% this week, while Cadence and TLA, ASML, Lam, Applied, On Semi, Teradyne, and Qualcomm have all had respectable weeks. Nvidia doesn't need to be brought up in every semi-conversation. They're on sale, you see. I don't care which. We can discuss Qualcomm if you don't want to discuss Nvidia. They're on sale, so I don't care. Not that long ago, Qualcomm was worth $230. Now, it is about $165, and the company's prospects haven't really changed in the last 2 months, to be honest. I love it even more here, if you loved it as much as I did when it surpassed $200. I don't care if you get into Qualcomm with me or not, you said, Steve. However, this isn't your day. Hold off for a week or a few days. This is simply where the markets are at the moment. Returning to what I said earlier though, if you enjoy Qualcomm, Applied Material, which I own as